Good day and welcome to another episode of Market Watch. Today I have a very special guest with me who is Professor Lalit Samarkot. Professor Samarkot is a professor of finance from the University of St. Thomas, Minnesota, USA, and Professor is also the president of the Sri Lanka Finance Association and is currently through the ADB is an advisor to the government of Sri Lanka on capital market development. Professor Samarkot, thank you so much for joining us today with your busy schedule. Professor, if I get to things, for our audience sake, I want to know why the capital markets is so important to a country like Sri Lanka specifically.
Well, it's a pleasure to be here, Radha. Thank you very much for inviting me. Well, I think it's a very good question. The capital markets are important to, I would say, almost any country. And Sri Lanka, I could place it in a special situation in the context of the current economic development as well. That becomes even so much important. So basically the purpose of capital market is to allocate resources, allocate funds from the saving public to the government and the corporations which would need money. So if you ask a question, why would the governments and corporations need money? They need money for investment purposes as well as other development purposes if you really think about the government. So in that context, that's why I say Sri Lankan government, Sri Lanka needs a lot of funding at this point, and the government obviously cannot do it alone. There's a limit to what the government can borrow. Therefore, one of the other options other than the government's traditionally financing through borrowings to direct loans and aids and grants of that nature, which is the typical funding mechanism, and the governments will have to find other means and ways of financing the developmental needs. In that regard, especially as I said, the capital markets could play a much pivotal role in the development process of Sri Lanka in finding funds needed for badly needed infrastructure development purposes, for example, as well as other development projects.
Yes. I think it's very timely as well, I think, Professor, if they are looking at it, because I think the government has been thinking about borrowing locally and not going overseas. So I think with the whole development will give the mechanisms as well as the route for the policymakers as well as the institutions to be borrowing and finding funding mechanisms, I suppose, through this development. Professor, also, I would go a little bit further onto the stock market Professor. In your view, how do you compare Sri Lanka to our regional peers in terms of the stock market?
Well, in terms of comparing Sri Lanka or any other country with any other stock market, what is typically done is to look at least two metrics, two measures: the size of the market and the liquidity of the market. Two key, you might see that I'm talking about those things going forward for many other related angles as well. Yeah. If you really look at the Sri Lankan stock market, let me take a comparison with the South Asian markets, our counterparts. The South Asian stock markets in general are about $3 trillion worth, the total market capitalization. If you look at 96% of that is India.
Yes,
India, of course. Obviously. Pakistan is about 2%, Bangladesh about 1%, Sri Lanka is about 1% of the South Asian stock market capitalization. So there you obviously have a very comparative view of that.
Yeah.
Sri Lankan stock market obviously is about $19 billion worth at this point. And in fact, as a percent of the GDP, it's about 30% of the economy. So just to give a comparison beyond the region, if you look at the Morgan Stanley Capital International, which is one of the major index providers, and they are the ones who classify countries as frontier, emerging markets, as you know, etc. So in the emerging market space, the market is generally about 70% of an economy. So we are about 30%, and obviously in the size basis, regionally, we are at the bottom. So we are a small market in that way. Then the other metric I mentioned, the size is important, the liquidity of the market. How liquid in the sense that how frequently the shares are traded in the market, and whether investors can easily enter and exit from their positions. So liquidity is one of the most important aspects of a capital market, obviously in this case, not only the stock market, in any capital market instruments, as
Yes.
you know. But if you look at the liquidity, one of the measures is the turnover ratio. The turnover is the shares traded, so the value of shares traded as a percent of the total value in the market, which we call the market capitalization. So that's the measure. On that measure, Pakistan is about 41%, Bangladesh 33%, India 27%, Sri Lanka 9%. So on the liquidity measure as well, Sri Lanka ranks the lowest in the region. To give a broader perspective, in the emerging markets region, on average, an emerging market, obviously Sri Lanka is considered a frontier market at this point. But I think emerging market is our goal, that we would like to be classified as an emerging market. The emerging market space, average turnover ratio is about 80%. So compare that to about 9% for Sri Lanka, which ranks at the bottom of the region. So what I am pointing out is not so much to highlight the weaknesses of the market, but to just point out realistically that ours is a small size, less liquid market, regionally speaking, as well as in comparison to the emerging market space. Therefore, that gives us an idea as to the gap and the room to improve.
So, Professor, I mean, taking all that, I think there's a lot more space I think we have to grow on to, Professor. So, I think, we've seen, like you rightly said, Pakistan is also quite ahead of us, and also they are moving up in the MSCI index as well. So, would you see some asset allocation happening through that, and maybe having a little bit more activity in markets like ours, or is that I'm trying to be a little bit too ambitious there?
Well, that's a good question. Obviously, that kind of you're pointing out the typical behavior of large foreign funds in terms of how they allocate funds to countries, and generally they tend to be regional first. I think that's what you are trying to point out.
Yes.
And if Pakistan is going to be classified as an emerging market, which actually they're going to do, right?
Yes.
Then obviously you would expect that a lot of investors, foreign investors, would take a look at Pakistan, right?
Yes.
And therefore they might increase the asset allocation to Pakistan, and perhaps as a spillover effect to the regional asset allocation. But whether that's going to spill over to Sri Lanka in some form, it is difficult to say. Obviously, as you know, that obviously we have got to resolve the economic or fundamental or size or liquidity issues in this marketplace in order to really in a big way attract the foreign funding. So it's difficult to say whether Pakistan reclassification as emerging market would benefit Sri Lanka. Certainly if that happens in an environment where the emerging markets are in general considered or viewed as growing.
Yes.
And in fact, obviously, you have seen recently Sri Lankan market has attracted a lot of foreign portfolio investments. And so you might say that in a way there's a positive environment, at least in terms of rather there seems to be interest on the foreign investors to invest in the Sri Lankan market for whatever reason.
Yes.
If that kind of sentiment continues, not only in Sri Lanka, in the region, and obviously something like this happens, reclassification, and that obviously will augur well for the region. Yes.
Thank you, Professor. Professor, also, I know you mentioned that we need to look at liquidity and in terms of the ratios and how it moves, and that's how we attract it. But on a be more specific nature, Professor, what would be like pension funds, local and international funds? What would they be looking at when they are investing in countries such as Sri Lanka? What would be the measures that they look at other than?
Very good. Beyond the size and liquidity. Size and liquidity obviously are very important.
Yes.
But we might say that they are kind of related to the market per se.
Yes.
Then I guess the real important thing, stock market or bond market or any other capital market activity thrives on the basis of the economy. It's built, it is a facilitator, right? It's a facilitator. If the economic growth, economic development is there and requires funding, and there's a good environment and mechanism for investors to contribute to the funding, then there's going to be a market growth.
Yeah.
Therefore, the point I am trying to raise is that actually the macroeconomic, macro level factors are the most paramount in terms of, if you really look at why would investors want to come to Sri Lanka in terms of foreign investors or even Sri Lankan investors looking at the market in a big way. So that means, in my opinion, I think these are fairly straightforward factors. Is the country growing? Right? How is the economic growth? Is the economic growth flat or is it picking up? What are the expectations? You can see any time you hear about an emerging market or frontier market, for whatever reason, government policy reason or some sort of a commodities boom or something of that nature, foreign investors will get very excited about, right? So the growth, because that will spur growth. And then obviously in addition to growth, the stability in terms of financial stability of the country's debt levels, debt management, debt sustainability, then fiscal policy, is the budget managed very well, exchange rate volatility from a foreign investor's viewpoint is very important. So those macroeconomic factors are obviously the first and foremost, the most important layer of analysis in terms of looking at the market. And then don't forget the political stability, right? So investors are going to want to, and they look at whether this country has political stability in terms of government, in terms of political mechanism and things of that nature. And then once you filter through those factors, then what is really critical is, does the government has a clear long-term economic policy framework, economic policy framework as well as economic policy. It has to be clear, so investors know that. It has to be consistent across different segments of the economy. And not only that, there has to be a demonstration that the government is in fact committed to a growth-oriented, reform-oriented economic policy, and those are the things actually really augur well for, will be looked at by the investors. Now, once you pass that macroeconomic, macro-political, government policy type of filtering, then you come to a situation of, if you want to call that the micro level, the market level. There also it's important, obviously Sri Lankan market is fairly well placed in that way. Do we have a fairly good capital market infrastructure and mechanism, which means the trading, clearing and settlement systems, are they in place? Do we have good investor protection? That goes into the regulatory aspects as well. And those kind of market infrastructure issues become important. Then from the viewpoint of the foreign investors, then obviously you could have all that, then the market should be accessible. The foreigner is going to look at, is the market accessible in terms of whether it is open to the foreign investors in the plus phase. Obviously we are open, no question about it. And not only should it be open, but they would say, well, can we enter and exit easily in terms of foreign exchange policies and things like that. I'm not talking about the liquidity, I'm talking about the capital inflows and outflows, regulations and things of that nature. Once you have passed those kind of filtering, will come the two most important things I discussed earlier, which is market size. Is the market size enough for us to be interested, particularly from a foreign big fund manager's point of view? And is the market liquid enough for us to be interested? Then that's at the very market level. And then obviously, where do they invest? They're going to buy securities, the stocks. Then they're going to look at the fundamentals of the stocks that they want to evaluate. There, of course, the size and liquidity of those stocks are important in addition to the fundamentals such as earnings growth as well. I think those factors, and plus I was trying to kind of convey to you kind of the sequencing of how the analysis or the filtering would take place, are very important, not only to the local investors but foreign investors as well.
Okay.
Yeah.
Right, Professor, thank you. And
Yeah.
so within these issues, Professor, what are the, getting back to a local context, what are the, in your experience as well, working with the policymakers, what are the key issues that you see in Sri Lankan capital markets at the moment that we should be looking at?
Well, we could easily go back to the several factors that I discussed just before.
Yes.
The previous question, what factors should be considered?
Yeah.
Then ask a question, which one of those factors are not present in the market in a desirable way, in a fully fledged way? But I think it will go back to...
Yeah, with having, we already do have a good foreign presence coming
Right.
in, and we've seen people coming
Right.
in. I think in that context, I think there's a lot more to reach, I'm sure, what you explained as well with the liquidity problems that we already have comparatively to the other markets, as well as some of the macro issues, etc., and then the clearing houses, all that aside, but looking at Sri Lanka, beyond those, what are the first few steps we could take? If I could rephrase that so that we don't step back to the past, what are the questions that we should be addressing at the moment?
I think in my opinion, the first few step, rather than first step, I think the most important overall step is to have a consistent policy framework for the capital markets, which means the government would it would be desirable for the government to recognize that the government needs financing, and the economic development needs more financing. Economic development cannot be funded totally by the government. Therefore, there's a role for the private sector to come in. Then the private sector as well as the government would need financing beyond the traditional means of financing, which is the issuance of government bonds, loans, and things of that nature. That's where the capital market would have to come in, right?
Yes.
So that is in that sense that I see the significance of having an overall government policy framework which would facilitate investors coming into the market, and they are very comfortable coming in because they see that they're going to have the growth.
Yes.
The market has growth because the funding will go into certain sectors.
Yes.
And I think that the policy framework will be the most important, critical. Having said that, obviously you understand earlier I talked about the size and the
Yes.
liquidity and all that issues. But overall, if you ask me, the one question as far as what is the most important, I think government could do a much better job in terms of articulating the capital market policy framework so that it is in the best interest of developing the country.
Yes.
Now that the capital market can be leveraged for the development of the country, it is not just for investors to come in and make money.
Yes.
Obviously investors would come in because in anticipation for a return, right? They
Yes.
need to have earn a rate of return
Yes,
compatible
definitely.
with the risk. There's no
Yes.
question about it. But that's the traditional viewpoint.
Yeah.
The markets, the stock markets, bond markets are for people who have money to come in and invest and earn a rate of return and increase wealth, which is very true. But on the other side of the equation, they are the providers of capital. The users of capital are the government and the private sector, right?
Yes.
And therefore, we got to understand that economic development needs a lot of financing. That financing cannot be totally met through government borrowings. There's a limit to borrowing. The governments keep borrowing, that limit goes up, then it becomes a problem of debt
Yes.
sustainability. It's okay to borrow as long as we can pay. Obviously, there are limits to that. The question is, are we investing the borrowed funds in productive investment opportunities which in fact earn rates of return or the cash flows to the government
Yeah.
so that the government will be able to repay rather than perpetually refinancing and increasing the debt stock.
Yes.
Therefore, that's why I am saying, look, we have got to look at the next 10, 20, 30 years and say, look, our needs will have to be partially met, increasingly met through private sector-led growth, and therefore the capital markets can play a very, very important role in that. Yes.
Thank you so much, Professor. I think that is very insightful for us, actually getting a very outlook. And I think to round up, I would say is the policymakers should definitely have a more defined outlook or a policy framework. Pardon me. They should be having a defined policy framework, and also getting the private sector involved, because it is important for the government not just refinancing every year in terms of their borrowings, but because they are facing problems with the limits that they are going to breach, etc. So when they get the whole capital market involved in the private sector, so it becomes an entire growth story on its own, I believe.
Right. So
yes,
very true. And in fact, so what one would have to understand is that the capital market it cannot function on its own. It has to function within a national policy framework, which is tied to the national financial sector policies as well as national fiscal and economic development policies. So I call this like an indispensable trinity, which is that you got to have the national economic policy framework.
yes,
Then you got to have the financial sector development framework. Then thirdly, you got to have the real sector, which is goods and services, production, manufacturing, right? What do you do in order to increase exports, export-driven growth for Sri Lanka, exports manufacturing-driven for Sri Lanka? That's the real sector.
Yes.
Don't forget, the ultimately financing is a mechanism, is a fuel to get something done, which is to produce goods and services, right? Therefore, I think the overall what we can greatly benefit, Sri Lanka could greatly benefit, is by having the recognition that we have got to have a consistent national policy framework, financial sector policy framework, and the economic development framework. They are not separate, and then they have to be interlinked and properly coordinated and implemented with a long-term purpose. If that can be done, I think we can say that we can break the cycle and go to the next level. You asked me about the frontier versus emerging markets.
Yes.
In order to graduate from the frontier, actually we were an emerging market, right? At some point, so we downgraded. So if you were from emerging market, that's quite important that we get these factors right. Yes.
Thank you so much, Pradhan. That was a wonderful roundup, and thank you very much for joining us.